And so I think Bitcoin is an orders of magnitude higher opportunity, greater asset class. It's solving a way larger problem for the world. And for that reason, it's actually better designed to capitalize a business and to be the treasury for a nation, for a corporation, for a central bank, for a pension, for a sovereign, for a family, for an individual. Whereas an Ethereum treasury company is capitalizing on an asset that might disrupt Visa. This is two fundamentally different things. One is much more venture-driven, highly speculative. It's assuming tech adoption trends and value accrual to Ethereum through adoptions of things like stablecoins, which is very unclear. The market is much smaller and the opportunity is very different versus saying the 60-40 portfolio is dead. The world needs to recapitalize on a neutral asset. Nations all over the world are debasing. It's causing these long duration instruments to severely underperform. Real rates are negative. Stocks are clearly overvalued. And everyone in the world are looking to capitalize themselves in a way that allows them to persist wealth into the future.
Jack Mallers starts off by raising concerns about the status of conventional finance. He describes how the value of savings is being devalued more quickly than most people realize due to rising inflation, constant money production, and depreciating currencies. For many years, investors relied on bonds and banks to safeguard their money, but Mallers contends that this outdated strategy is no longer effective. Bitcoin is more than just an alternative investment in a world where fiat money is unreliable. It's becoming essential for maintaining purchasing power and financial independence. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
Yeah, well, to be honest, one of the reasons I founded the business with Tether is the opportunity that we see in the capital markets specifically. I think the capital markets are going through, and just the wider investment base, portfolio managers, endowments, pensions, sovereigns, they're going through a very drastic change, which is the 60-40 portfolio for the first time is being highly questioned or is considered dead. And this is that idea of weighting your portfolio with equities and bonds or long duration instrument. And the reason for that is, bonds have been poorly performing over the last 5 years since COVID. And stocks, if you take out the Magnificent Seven, actually are negative in real terms. And so I think you're seeing these equities are artificially inflated. I think that the equities are going to come down in value and in multiple as tariffs continue to hurt them. Seeing Apple, Ford, Procter & Gamble, these companies are taking multi-billion-dollar annual hits because of tariffs. It's going to eat into their margins. It's going to eat into their multiples. And so investors are actually seeking real returns, deep, large capital pools, arguably for the first time ever, at least in this modern post-1971 era. And so coming to them and saying, well, we're going to measure our business success in real terms, which we consider Bitcoin terms. We're not going to measure it in a depreciating, debasing dollar. I think it's actually unfortunate that Bitcoin gets compared to an asset like an Ethereum or a Dogecoin or Solana. I think that they're considered in the same basket of class because these projects were inspired by what Satoshi created. But I think fundamentally as investable assets, they couldn't be more different. My logic here is, human beings own a little over $900 trillion worth of stuff. So if you think broadly, we own, whether it's sovereign debt, like a bond or a long-term treasury, whether we own currencies, whether we own real estate, equities and stocks in a company, precious metals, collectibles, fine art, the collective goods that we own together as a species is a little over 900 trillion. What's fascinating about this number is about half of the stuff we own, we're using as a savings account. We've monetized is what we call, is that we're using the good or the service, not to consume it. You don't own the house because you actually live in it. You own the basket of real estate because you're trying to just persist and save your wealth into the future without it being debased away from you and lost in purchasing power. So that puts the market size and the opportunity of humans that have created value and want to bring it with them tomorrow and save and persist that wealth. That's about a $400 to $500 trillion opportunity in purchasing power terms today. Now, if you look at an Ethereum or a Dogecoin or a Solana, what's their opportunity? Where are they disrupting and solving a problem? I would make the argument, first of all, I don't know, but I don't know if anyone knows, to be honest. I think these narratives tend to be cyclical. They've changed quite often. But if we were to give them the benefit of the doubt and say they're going after an Apple or an Amazon or a Visa, sure, that's a $2 trillion, $3 trillion opportunity at best, given current market values of these tech stocks. And so I think Bitcoin is an orders of magnitude higher opportunity, greater asset class. It's solving a way larger problem for the world. And for that reason, it's actually better designed to capitalize a business and to be the treasury for a nation, for a corporation, for a central bank, for a pension, for a sovereign, for a family, for an individual. Whereas an Ethereum treasury company is capitalizing on an asset that might disrupt Visa. This is two fundamentally different things. One is much more venture-driven, highly speculative. It's assuming tech adoption trends and value accrual to Ethereum through adoptions of things like stablecoins, which is very unclear. The market is much smaller and the opportunity is very different versus saying the 60-40 portfolio is dead. The world needs to recapitalize on a neutral asset. Nations all over the world are debasing. It's causing these long duration instruments to severely underperform. Real rates are negative. Stocks are clearly overvalued. And everyone from China to Russia to the United States to El Salvador to businesses in the capital markets and to individuals all over the world are looking to capitalize themselves in a way that allows them to persist wealth into the future.
According to Jack Mallers, big money is already in motion. It's not a forecast. Prestigious universities like Harvard and Penn State have already included Bitcoin in their endowments. According to him, the traditional 60-40 portfolio, 60% stocks and 40% bonds will eventually change to something like 50, 30, and 20, with Bitcoin accounting for the new 10 to 20% portion. According to him, organizations are starting to realize that Bitcoin is a means of escaping systemic risk rather than a dangerous investment. Also, a quick reminder, only a small percentage of viewers are subscribed. If you enjoy deep dives into crypto and finance, hit that like button and subscribe. It's free and helps the channel grow. Now let's get back and hear what he has to say.
So your earnings are probably up in dollar terms because your iPhone is up in dollar terms, because your Starbucks coffee is up in dollar terms, because your rent is up in dollar terms. It's a fancy way of just showcasing the dollar is down because monetary debasement and currency debasement has to happen at the nation state level, and the dollar is just losing purchasing power over time. So we thought to ourselves, what's the best way for us to communicate to the market that we think in Bitcoin terms, and that Bitcoin to us is the new hurdle rate. And we want to measure our business and our success and communicate to our shareholders that we can be performant in a Bitcoin per share basis, because that's a unit of measurement that can't be printed. And it's actually the best performant unit of measurement. And if you can't be performant in Bitcoin, then what's the point of owning a share? You might as well just buy Bitcoin. And so that was the design of the KPIs, is to show the wider market, the capital markets, existing shareholders and future shareholders, that we're not taking the lazy route and measuring ourselves in dollars, because as I mentioned, everything's performant in dollars. You can buy a stack of coffee beans and be up year over year and post returns in dollars, but it's harder in Bitcoin. And we're planning to hopefully pioneer the way the capital markets measure businesses in a measuring stick that's a little bit more fair and honest to the investor.
The Bitcoin ecosystem, the Bitcoin blockchain, is actually what might power the next iteration of the internet.
What's funny about the narrative that these Ethereum treasury companies have created is my co-founders are the inventor of stablecoins, and we've created a Bitcoin treasury company. So I would wage to say that the inventor and the largest stablecoin in the world probably has the market expertise that everyone else lacks. And they don't even think an Ethereum treasury company is a good idea. So I think it's a highly questionable narrative, and it goes down to, why would stablecoin adoption necessarily accrue value to Ethereum, the asset itself? I think it's going to be highly competitive, and a business like Tether is not dedicated to any specific blockchain, believe it or not. Tether is issued on all sorts of chains, and Tether will be issued and used in whatever the market deems the best. There's now blockchains coming out that are specifically designed for stablecoins, which is going to be highly competitive. So again, I think that these narratives are cyclical. The reality of the situation that we're all in is that we're all speculators, whether you know it or not. When you walk out on the street and you see people going about their day, sitting in traffic, waiting in line to get a coffee, whether they know it or not, they're a speculator, because the currency that they're using is constantly losing value every single day. And so it is an open competition to basically say, hey, you need to save your money, put it over here with me. And, people are going to create narratives and create ideas on why, you should do that over other things like a bond or like an index of stocks or like a Bitcoin treasury company. And so we're living in this frothy environment where we're all on this currency debasement train together, and everyone's competing with how and what's the best way to persist that wealth into the future. But again, I think it's highly speculative. It's very unclear. It's not necessarily proven. Where you look at an asset like Bitcoin that the United States has a strategic reserve for, that other countries around the world have started to acquire and mine, and it's a $2.5 trillion asset that's already the 5th largest asset class in the world. It's just, again, it's worlds of difference, and I think value will continue to accrue to Bitcoin, yes. I don't necessarily agree with the premise of that question. I store my wealth in the best place for me, my family, my loved ones, my employees, my shareholders. It's the hardest thing I can possibly own. And hard is in reference to how hard is it to make more of it. And that's the very logical decision. I wake up every single day and I say, where's the best place for me to store my effort, my labor, my time, my energy? And it continues to be Bitcoin. I make that decision at the margin every single day. And then I would say my work to go and help people live out the experience that I've had in being able to persist wealth in the best performing asset. You can look at it as a very self-interested endeavor, but you could look at it as a very honest and entrepreneurial endeavor to help like so much of the world that has lost so much of their purchasing power by unfortunately sitting in something like the dollar or something like bonds or something like the S&P 500. So I disagree with the premise of the question is that, if you have found something that can better the greater half of humanity, are you selfish for empowering others to benefit from it as well? Or are you selfish for keeping it to yourself? So I disagree with the premise. I would assume that if a certain basket of humans found the future that can usher in a level of prosperity, it is the moral and principled thing to do to actually spend all your time and waking hours helping others gain benefit and access to it as well.
Jack Mallers responds to the hysteria that treasury companies based on Ethereum have been generating. He notes that although his own co-founder was the one who created stablecoins, their business decided to create a Bitcoin treasury corporation rather than an Ethereum one. Since Tether and other stablecoins already issue over numerous blockchains and will always shift to the chain that is the cheapest and most efficient, he believes that stablecoin adoption does not automatically make Ethereum valuable. He claims that everyone is attempting to persuade others where to put their savings in a fiercely competitive market. In actuality, because our currencies are continuously depreciating, we are all speculators, even regular folks purchasing coffee. As a result, bonds, stocks, Bitcoin, and fresh theories about where to save money are put in open competition. Bitcoin is unique in Mallers' opinion. Governments mine it and strategically hold it, making it the fifth greatest asset in the world, valued at $2.5 trillion. Compared to unproven altcoins, that is a significant difference. Since Bitcoin is the most difficult asset to produce more of, he retains his wealth in it. Mallers also outlines his company's strategy, which incorporates shrewd financing, acquisitions, and lucrative business lines to increase the value of Bitcoin per share on its balance sheet. Instead of diluting shareholders' shares, the earnings are then swept into Bitcoin. He claims that this strategy is drawing significant institutional funding. He predicts that portfolio models like 60-40, with Bitcoin accounting for the new 10 to 20% allocation. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.